Thank you everyone for being so patient. We'll get started now then. So welcome to Founder Pitch. It's been a minute since our last one, but we're really excited to be bringing it back. And today we have some really exciting companies and founders here to share their pitch. So we'll get started by introducing our founders. So our guests today are George Kailas, founder of Prospero AI, Doug Bertram, founder of Structural Elements, and Stephen Kircher, founder of Reenergize. The way we'll get started is Prospero AI will start. If you have any PowerPoints to share, you're welcome to share your screen, or you can just give your pitch verbally if you'd like. What do you have ready for us?
Cool. Thanks for everybody that's attending and anyone that's watching this after. Uh, First thing I want to just let people know about Prospero AI is, we consider ourselves more than an investment company. We're a mission and a movement. And our goal is to give everyday investors the same advantages once reserved for large financial institutions. And on a day-to-day basis, what we help people do is help anyone pick stocks like a pro. Uh, our track record is there. We've actually been doing this for 4 years. We've given away our newsletter picks for free, and those picks are on average beating the market by 67%. It's not luck. We're really consistent. We've been between 58 and 63% this year win rates versus the S&P 500. Our SPY beat this year is about 70%, so we're right near that average. And beyond, what we teach in our newsletters, which is really important, we teach a process in addition to these signals. But our app transforms a complex web of information into 10 intuitive signals that help investors or traders. And what we're really doing that's unique is we can teach even less experienced investors how to fish. And one of the things we see is there's a lot of solutions out there that are offering sort of similar things, but we're providing a different kind of value. There are these generative AI solutions that, when you ask them to compare a company, they'll give you something like a PE ratio. So they're taking simplicity, they're taking new technology and giving you old data. We have seen, like with companies like Palantir, how off these PE ratios can be, especially now. That's one of the reasons we've created these, modern, effective signals that are quite differentiated and unique. Then you have all these other solutions, that offer, good products, trading signals, charts, but a lot of them are really complex for everyday people to check, use. We've boiled it down to, 10 signals, easy to use, interface. It was designed by a former creative director at Apple. So we have that intuitive interface. We have a process along with it, and they're, very powerful signals. People use our app already in 163 countries. We have these newsletter resources. We do live streams. But we're gaining momentum now as we speak. But we have a long-term fix for this too. Not only are we delivering value today, right now, hedge funds spend billions of dollars on alternative data, real-time credit card swipes, camera data, satellite images, web traffic to basically turn data generated by people against them. And we actually have a long-term vision to earn trust, gather community data, data like, what is next phone you're going to buy? How much are you going to spend this month? That can, offer similar results, but deliver these results to a community. As I said, our traction is really getting great. Recently we won Best FinTech AI Startup 2025 by the Global Financial Market Review. I was honored to receive the Most Influential FinTech CEO 2025. So people are really starting to take notice. And, this is a movement. We are just, starting it. You can see, some of the attention that we're getting. You can go on our page. You can see the reviews that people say about us. You can actually see what the head of eToro US said about us. But, some people, when they hear this, I have to request screen sharing. But, some people, when they see this, want to know a little bit more about how it works, right? This is a newsletter that we sent on 3/30/25. Of course, those that don't know, the market really crashed on 4/3/25. And it's called Don't Trim the Hedges. And we were actually telling people, everyday investors, how to use inverse ETFs to hedge their positions because we saw trouble coming. And, we saw it coming for a while. We share this newsletter every week. We showed our SPY net option sentiment was fixed at 0, so we gave people a warning. We gave people practical advice before it happened. Another good case study we have was CoreWeave recently. And not only did we get between $4 in the top, $1 in the bottom, we flipped from long on 8.5 to short on 8.7. And our signals really told us this. You see, same thing, net option sentiment at 0, upside, one of our key signals, started to go up. We got out as net option sentiment got out. We got out of our short and into our long. And then as we saw net option sentiment fall before CoreWeave's earnings, we got out. And we actually got back in recently because we saw them turn. People can follow our positions. That's what we say. We're very open. We're not cherry picking this data. People can see what we're investing in, follow us. And, we're really delivering on that promise of helping people, everyday people deliver better. We're seeing great growth. We just upped our marketing spend, and we've actually 3x'd our app weekly actives in the last 3 months since we started doing this. And we have our flagship alerts product being released around this crowd fund. So only people that invest in the crowd fund get access to, what is our flagship product. It's going to be our best idea every day. It's our easiest product to follow. It's also a higher price point, $50 versus 10 and 20 for our newsletters. And we want to make people a part of that, a part of the marketing story. People that invest in our company are going to be the first users, the first evangelizers. And that's our approach to growth. All of our spend has been in, social media right now. There's a great response. We want to look at ETFs. We want to look at mutual funds. We're looking at partnerships with smart portfolios. You can see what the head of eToro US had to say about our products at the top of our carousel there. We have a partnership coming with Finimize. We have other international expansions. TrendSpider is another thing that we're close to officially announcing. We're finalizing some things, but people really notice the differentiation in our content, and that's why a lot of this will be natural. Like what we're going to do with Finimize. We've had a relationship. I've spoken with them, but their analysts are going to start looking at integrating our signals, so we get kind of that organic thing, and that only exists because they see the value in what we're doing. So, we have this short term, we have alerts. We're going to roll out a paid Discord. We're actually going to release some generative AI experiments on that. Then we have a web app. Those are our services. Long term, we have big potential in asset management that's going to really start to, increase our revenue. And also we're going to offer a unique product in that. I mentioned we're going to gather data from our users. So we're going to be the first platform that gathers data from our users and delivers it into asset management products for them that are going to be highly differentiated as a result of that. And that is how both in the short term and the long term, we're delivering hedge fund level information and products to people that haven't gotten them before.
Wow, thank you so much. That was a very comprehensive and very wonderful overview of Prospero. If any members of the audience have any questions for George, feel free to leave them in the chat and we'll circle back later. Do you have anything else you want to add before we move on to our next Pre-Med Center?
No, I don't. I don't know how I did on time. If I have a little more time, I always like to do more case studies, but maybe if people are curious about that, I'll do that later. We can let that progress.
I think you were honestly pretty good on time. Okay, so we'll move on to Doug next to present structural elements.
Great. Well, again, thank you everybody for taking the time, and thank you for having me. And I want to start by just introducing myself as Doug Bertram, CEO and founder of Structural Elements. I have been a practitioner for 30 years now, and I have been building and growing structural elements for the last 15 years. We became a franchise in 2015, and we have been educating providers and really taking the deep dive into value-based, cash practice, very much focused on patient outcomes as the central hub of our thesis. We're an orthopedic wellness concept, and most people have never heard those two words put together, orthopedic and wellness. We are very much about the proactive, preventative side of care. I'm going to try to share a little video with you here. Hopefully, it will allow it to play. And let's see here. Let's see if it'll allow me here. Sorry, I'm not getting this to allow me to play the video.
No worries. Are you trying to share your screen?
Yeah, I'm just trying to share the screen. Oh, I think maybe that worked.
Okay.
All right. Is that showing up for you there?
Yep, looks great.
All right.
Hi, I'm Doug Bertram. I'm the CEO and founder of Structural Elements. I'd like to welcome you to our flagship location, where we've built a one-stop shop for orthopedic care. We are not a startup. We have already delivered over 100,000 treatments. We're also a franchise with 3 locations, and all of our documents and our systems are all built, and we're ready for scale. Our focus is on proactive and preventative care. Because of this, we're a cash practice. Oftentimes, when you're in a traditional insurance environment, you get stuck treating symptoms alone. We offer it all under one roof: acupuncture, physical therapy, movement-based therapies like yoga and Pilates. We even have all of the passive recovery modalities that are available via membership. That's cryo and red light, sauna. But we're not limited to those. Our thesis is really as an orthopedic practice. So if any technologies evolve or if any best practices develop due to advancements in science or technology, we can adopt those. We're not a one commodity franchise. All of our providers are trained in our proprietary method. Our method is really based on a proprietary mapping of where change happens in the connective tissue due to structural imbalances. So it doesn't matter if it's a massage therapist or acupuncturist, medical doctor, one of our movement therapists, they're all trained in the proprietary mapping system that is Structural Elements. Most healthcare providers have to make a choice. They either work in the insurance world and stay in that grind, or they have to take on a lot of risk by going out and hanging their own shingle. We offer a third option, which is a shared cost model where our franchise is set up where providers can come in to a turnkey ready solution in a shared cost model. By being a one-stop shop in orthopedic wellness, our patients oftentimes see multiple providers. Our patients may start with one person, for movement. They may see another therapist for manual therapy and then enjoy some of our recovery modalities or a class. This allows for fewer patients that we have to acquire newly and a greater dollar density per patient spend. Our growth plans are to expand to over 125 locations within the next 5 years. Orthopedic wellness is a multi-trillion-dollar worldwide industry. So we think that there's plenty of market share out there for the taking. We're currently 100% owned by our patients and our providers. We couldn't be more excited to be using crowdfunding as a path to bring this work to more communities and to have more people benefit from the work that we're doing at Structural Elements.
All right, am I back here?
Yep,
All right.
you're back.
Perfect. Yeah, our space is very much a part of our brand. We very much believe that quality patient care extends far beyond just the treatments that you're receiving. It also is dependent on establishing a safe community and an environment that is both nurturing and welcoming, as well as allows for the patient to experience a deeper sense of relaxation. We oftentimes hear patients come into the clinic who have been to a chiropractor or been to physical therapy, and oftentimes these solutions treat the body in terms of parts. And we really look at the body as one comprehensive intelligent system. And so in insurance-based care, oftentimes that care is very fragmented. People have to go to one therapy session for their shoulder, and they have to go to another one for their elbow. And it's like, how in the world can you not see those things as being connected? By being a cash-based practice, we are in a relationship with our patients, and our commitment to them is to provide the best care possible. We have a proprietary method that really allows us to look at the body and predict where problems are going to occur instead of waiting until a joint is in disrepair or in need of surgical intervention, or somebody is living in chronic pain. By looking at the body as one intelligent system, helping balance the body, helping recalibrate the nervous system, regulate and control inflammation, get the body moving again and re-educated. This is where people can get back to experiencing better quality of life and enjoying the movement that they like to see. The problem that we've solved for providers is going into a cash-based practice oftentimes is very expensive. They have to leave their paycheck from the insurance-based model, and they have to go out and most times build out their own clinic and take on a lot of expense. And so we've created a shared cost environment where providers can come in at a very low barrier to entry, make a competitive living against the paycheck that they would be able to achieve in an insurance-based model, and have a higher quality of life. And they're there to just solely focus on quality patient care. The reason that we franchised is to protect the brand and to be able to bring this work to as many communities as possible. Our goal is 125 franchised units in the next 5 years. A lot of people swallow hard when they hear those numbers, and they are ambitious, but those numbers are very attainable if you look at the growth pattern of other single commodity franchises in the franchise space, in the health and wellness space. And the process of how that's achieved is not selling one-off franchises. It's through territory development. So our target is seasoned franchisees who are multi-brand, multi-unit owners. And we are looking for 25 seasoned franchisees to open territories with a 5-clinic development schedule. So as you're getting into that type of development, scale can happen quite quickly, and that's how most franchise systems achieve that scale. So I'll pause there and leave the rest for the Q&A.
Thank you so much, Doug. That was wonderful. Yes, again, if you have any questions for Doug and structural elements, please leave them in the chat and we'll get to them later. Okay, Stephen, you're up.
Great. Thank you very much. And I'll share my screen in a second. Thanks very much for having me. So my name is Stephen Crocher, and I'm the CEO at Reenergize and co-founder. So I'm quickly going to share my screen, and I've got a presentation for everyone. So, oops, excuse me, started halfway through. So, Stephen Crocher, CEO at Reenergize, and at Reenergize, we're developing a long-duration energy storage solution that we call high-density hydro, and we're solving energy system security with a low-cost, scalable solution. So what we're doing, we're solving a 30,000 terawatt-hour problem, which is how to create secure supply from intermittent renewable generation. But not only how to create secure supply, how to scale this product globally in just 20 years. And this creates a multi-billion-dollar opportunity. And the problem, it turns into an opportunity for Reenergize. So many countries are seeing exponential growth in their need and their demand for energy storage. This is driven by renewable energy generation, but also increasing demand. And thirdly, it's by increasing number of countries legislating for renewable generation sources and legislating for energy storage. So the commentators in this space are predicting that the market need is going to grow by 40 to 50 times by 2040. So that's just 15 years away. So our patented solution is a form of gravitational energy storage. We pump our proprietary fluid up hills when energy is abundant and then release the same fluid down the same pipes and regenerate electricity through a turbine, which is then returned to the grid. It is based on traditional pumped hydropower, which is where traditionally you have a lake at the bottom of a mountain and a lake at the top of the mountain. And when energy is abundant, you pump the water up, and when energy is scarce, you re-release it. We're effectively doing the same thing, but only better. We've developed a fluid which is 2.5 times the density of water. So this fluid is so dense that concrete floats, but it's free flowing, a little bit like half and half cream. So it's a solution where our supply chains already exist with more than enough sites to solve the energy transition many times over. So this is the demonstration project that we have finished construction in the UK. So it's the construction is completed, the mechanical and electrical installation is completed, and we're currently filling the lower reservoir with our high density fluid. And then after a project is finished, it can be entirely buried and hidden from view. So it's a solution that is both environmentally friendly, but also from a visual perspective, that once it's built, you can entirely hide it. And as a company, we've been incredibly successful in raising capital to date. So we've raised over $22 million in both grants and equity, of which nearly 75% is in non-dilutive capital from governments. And this project is effectively retiring our technical risks. And a few more details about the project we're building. We have an upper storage tank at the top of the image. Pipes come down the hill. The powerhouse is on the right, and then the lower storage reservoir is in front of us. We have a fantastic team. We are 30 individuals. We have extensive test facilities in North America where we've solved the issues of abrasion, stability, efficiency, the control of a project, the fluid management system, etc., etc. And we have a facility where we can build pilot and test rigs to test individual problems before implementing them in a real world project. So how do we make money? This is the important thing. So there's three stages to how we make money. And it's probably important to say who our customers are. So our customers are companies that wish to own energy infrastructure projects. So this is a large-scale infrastructure that goes onto the power grid. It could be co-located with renewable or close to demand or close to points of grid constraints. So as a project is being developed, during when you're getting the permissions to build, you're getting the grid connection agreements, etc. We're providing consultancy services to the developer of the project. Once a project has reached financial close and it's starting to be built, we're the conduit for supply for the technology that goes into the powerhouse and the fluid. And then once it's operational, we have operational maintenance functions and then performance-based royalties on the project. So the question we often get is, how do we compete in the market? And so the part of the market that we're in is what we probably call a medium duration part of the market. You have short duration solutions dominated by lithium-ion batteries, and you'll have interseasonal type solutions, which probably be green hydrogen or something else. But in the middle, you need a medium duration solution, which is to do the day in, day out trading of energy. So when the sun comes up, you charge our system, and then as the sun goes down, you re-release it to consumers, and then overnight and again in the morning. So on a grid dominated by solar, we're charging our system once a day and releasing it evening overnight and in the morning. On a grid dominated by wind, the wind cycle, weather cycle is a little bit longer. You usually get 2 weather systems a week on average. And so you need a slightly longer duration, but it's in the order of 8 to 16 hours, which is where the energy volume, where the volume part of the market is, and therefore where the money is going to be made in the market. And looking at that part of the market in 8 to 16 hours, we're half the cost of a lithium-ion battery solution and significantly lower than other solutions that are out there. We have an extensive pipeline of projects, so it's valued at over $600 million in terms of the capital spend on our current pipeline, and that's just the first 28 deals. And there are 162 deals in our pipelines across 30 countries, and we have letters of intent and MOUs in Canada, UK, Ireland, and elsewhere. So there's some very attractive markets out there. Doing a little bit of a deeper dive, this is looking at the forecast growth in Texas, and just the challenges that you have is how do you scale solutions for the demand growth that is predicted because of demographic changes, because of data centers, because of increased electrification. So in Texas, they're talking about 85 gigawatts today, up to 145 in just a few years. So it's a phenomenal rate of growth. And the fastest way to create that energy is with renewables. That's what you can deploy most quickly. And then we're a solution that sits alongside the renewables, which creates the stability for the grids. Across the world and across the USA, we find more than enough sites to solve the energy transition many times over, including the increased demand growth. And so in somewhere like California, 20,000 sites, and just so 1 or 2% of those sites provides enough energy storage to balance intermittent renewables. And then you can see that in different states that you find huge number of sites and more than enough to solve the problems. So we have 17 patents filed across 12 patents. Can't get my words out, across 12 patent families. We have 3 that are granted that have gone out to filing across 150 countries. We also have 4 trademarks. Founded by serial entrepreneurs. I'm going to skip over this. It's available on obviously available on the Republic site. And so what are we looking for? At the moment, we're targeting at $1.5 million with a ceiling of $3 million on this late seed round. And we're continuing to secure non-dilutive funds. So we've just been awarded a €2.5 million grant. So that's euros, not dollars. So that's getting on for $3 million of grants from the European Union. And then the use of funds is the continued development of the technology, but also developing our pipeline and increasing the number of countries and states that we can deploy projects into. So I'm going to stop there and welcome any questions. And this slide is just a brief summary of what I was talking about. And we think we have a fantastic solution that really fits the market in a market that is just huge, a market that is measured in trillions of dollars. Many companies talk about their market being millions or sometimes billions, but ours is trillions of dollars, and that's 1,000 billion. So it's a huge potential market, and there will be some companies emerging in this space which are going to be huge global countries of the future. Thank you very much.
Thank you so much, Stephen. That was a great presentation. I'm actually thinking that we have a couple of questions in the chat, so I'm thinking that we'll answer those first and then jump into our rapid fire questions at the end of the webinar. But before we get into the questions in the chat, I just want to say a quick disclaimer. Everything you hear today is not financial advice. Please do your due diligence and research before making investment decisions, and always remember that or have the understanding that past performance does not indicate future returns. So let's take a look at the questions in the Q&A. Our first one is for George. It's a pretty comprehensive question, but Angela wants to know, what's the long-term vision for the platform? Where do you see yourself in 5 years in terms of size, profitability, etc.? And how do you think about scaling the business, both in terms of services offered and reach? We'll start there. There's a little bit more to the question, but if you want to get started with those.
I'm going to actually pull up our model. I mean, in terms of projections, I actually started I worked at my first hedge fund when I was 17. I taught myself accounting to work at my first value fund. So I'm a pretty picky modeler. And you know, 5 years out on the model is not, you know, is not something we do. We do go to 2028 though, and I can kind of show you how our projections look. You know, we think we could be profitable in 2027, you know, based on, you know, kind of what I was laying out in terms of, you know, the vision. I'll put it more on like a timeline roadmap. So we have our trade alerts getting released this year. That is going to be, like I said, our flagship product. And, you know, from there, we're going to roll out, you know, really hammer that in terms of marketing. A lot of the money that we're raising is going to go to marketing. Expanding our influencer relationships, I mentioned, you know, testing ads, expanding partnerships. And we think we can really increase our, you know, revenue a lot. I think we're going to do some B2B services. We already have some interesting things in the pipeline for that next year. Then in 2027, that's when we're launching, you know, kind of the asset management business. And that's why you see, you know, the big jump in, you know, 2028. Because that'll give us a chance to really, you know, ramp up, work on our services. You know, another thing that I didn't mention, you know, web app, Discord, all of that is going to get released in 2026. So we have a lot of products coming after this round that you see that, you know, big jump. And then in 2027, it's going to kind of be another like, you know, build year for the asset management products. And then you can really see those asset management products, you know, as I mentioned, smart portfolios, ETFs, mutual funds. We might do all three. We might do some of it. We're going to start integrating the alternative data there. And we think we can scale, you know, a lot, have a big user base by that point. You know, we already have some really, really great, you know, traction numbers that I didn't share originally. You know, we actually have had 20% of all of the people who've entered our funnel that still are weekly actives. So that really beats the industry average of 3 to 7%. So as we make the products, you know, a richer product environment, I think that's going to be really great things for monetization, especially as we've increased, you know, the trust as well as we have. You know, one thing that some people look at us and, you know, we've been around for 6 years, but part of that is because we're so really stringent about quality control. We take people's money very seriously. So actually the first 3 years of the company was actually just me working on the app, turning our back end signals into a front end interface that I could use and use alone to make my decisions. And then from there, we've, you know, evolved it further with, you know, a V3 and V4 of our app. That's what people see live today. So we've done similar things on our trade alerts. We've actually been, you know, testing, evolving that system, adding even a more modern, you know, LLM information gathering interface to that as we're releasing it. So we're very careful about that. And so similarly, we're already thinking about our asset management product development for a 2027 release because everything we launch, as you can see, is pretty pristine in terms of how it performs, and we will continue to do that.
That's great. Sorry, second half of the question actually is, given how good the signals are, like why not run your own fund? Is that something that's in the future pathway?
We are looking at, like right now, we're actually looking at supporting a hedge fund for 10% of the overall economics, delivering our signals. But there's a few things about that. We want to earn people's trust, not their money initially, right? So we can scale a lot long term and create that better future that I talked about. That's going to be built on trust. The only way people are going to share information with us is if they think they are the priority. So that's why we're even thinking about this, you know, hedge fund thing very, very carefully. But even then, they wouldn't be getting it in front of anyone. We would be prioritizing, you know, our users first. But go look at the story of Delphia, right? I already had this inclination that you can't, earn trust and be a hedge fund at the same time or collect data. Basically they were doing that. They said, "Hey, give us your data. We'll invest for you." But basically, the Reddit generation, I give them credit. They're great at their diligence. They figured out that they were basically selling a higher class hedge fund to other people. They got reported to the SEC. Their retail business is now shut down. So this already was my plan before I found that out. But retail investors are very particular, and we have this really big long-term goal of working together. And being a hedge fund doesn't create that relationship of trust.
That's a great answer. I think that emphasis on trust is wonderful. Thanks for answering. So our next question actually is for Doug and structural elements. Adam wants to know, does the structural elements system include nutrition? Is the Pilates or similar exercises program a class? And how is payment for those services handled?
Yeah, thanks for those. Yes, so we do offer nutritional counseling. And even more so than the what you eat is the facilitation of making those lifestyle changes. So we have health coaches that work with individual patients as well as cohorts of patients and provide seminars. We believe that controlling inflammation is absolutely at the core of having healthy orthopedic function. And so a lot of our focus is on optimization of nutrition for the purpose of anti-inflammatory components. And so, but for a lot of people, it's not just what to eat. A lot of people know what to eat, what to avoid, but making those lifestyle changes and meal planning, meal prepping, how to navigate the grocery store, a lot of that coaching really comes into play in terms of really helping somebody implement that change and stick with it. So a lot of our emphasis is there. We do have a studio where we offer Pilates mat classes. We also have a reformer studio. So we do both classroom and individual sessions. The reformers, we don't do anything bigger than 2 patients at a time, because that piece of equipment is extremely valuable if cued properly. And so we don't really view that as a workout. We very much view it as a movement training, very much in a therapeutic context. So we do stick with that. Patients are responsible for direct cash pay. Obviously, we always get the question, does that mean you only have to, take cash? No, it's obviously you can pay with credit card and traditional payment methods, but we do not do any direct insurance billing. We will provide our patients with a super bill for reimbursement. If they have coverage and an itemized bill, they can submit that to their insurance provider for reimbursement. We also do take HSA and FSA payment for our services. But it's our philosophy that we don't want to get into bill collecting. We don't want to spend our time chasing payment. It's a contract with our patients that they're going to pay us a set fee. We're very transparent about our pricing, and we're going to do absolutely everything within our power to get that patient better quickly. A lot of times in the insurance world, guess what? If you have 12 visits approved, you're going to get 12 visits of care. And we don't believe that that's the way it should be. We try to get people back to their activities as soon as possible.
That's great. Thank you so much for answering. Okay, so our next question is for Stephen. This attendee is wondering, you mentioned it's $1 trillion market. What do you think re-energizes serviceable, addressable market?
Yeah, that's a great question. So the key thing about the market is it's so big that actually you're going to need a whole number of solutions. And so we think that there are going to be a number of winners in this market, and that the winners will be evident in 5 years' time who have been on the race. We have a solution that is, very credible, and can certainly be part of this huge market. The market share question is really more of one of any particular company's ability to scale, and that really comes back to, do you have enough firepower to grow your teams sufficiently fast to deliver a solution globally? I think we will see in this medium duration or long duration energy storage space that there will probably be something like 10 winners. So 10% of that market is what any one of those could potentially do. I realize that is not quite a sort of specific answer, but it's really about the ability to scale, and some of that is really about supply chain. And one thing that we're really focused on is how do you scale the supply chain? How do you work with companies in different countries simultaneously so that you can do multiple projects all at once? And this goes back to our business plan. And a lot of what we do is really about scalability, that if we try to build one project ourselves and then another project and then another project, we'd have a profitable business, but we wouldn't have the impact that we could have if we partner with people. And so a lot of our focus is having a business model that is scalable, a solution and a supply chain that are scalable. And one of the key things that we have is that our supply chain already exists in every continent across the world. You can get the sort of equipment that we need for our projects. It already exists globally. And that's also a great route to market. If we're using a North American pump manufacturer for projects in North America, then they're part of our solution to sales as well. So hopefully I've answered that correctly.
Great, thank you so much. Okay, back to you, George. Someone is asking, is there a YouTube video or guidance on how a retail investor can utilize Prospero AI for investment or trading?
We basically have a doc. So in all of our letters, there's, we give a link to like our performance and how people can follow it and the picks that we make. And then this, Google Doc that has, videos, some other learning resources, that, can really get you up to speed on how to use the app, how to use the newsletter. We've definitely invested a lot in these, video resources, other things. You can also go to our website. There's explanations. There's actually some longer form philosophical videos of how things work. Our YouTube page is also a great way. We live stream twice a week. I'm proud to say, like, we started over a year ago and we might have had 100 viewers, and now we routinely get 2,000, 5,000 viewers. So come there, ask whatever questions you want. We're constantly trying to answer questions, teach people about the platform. And yeah, whether or not you could invest in the crowd fund, we'd love to have you, be the best Prospero user you can be.
Great. For Prospero again, how are you creating a moat around your product, especially given there are so many tools out there for trading and recommending stocks?
I mean, the first thing is I'm a numbers guy, right? We're 4 years in, and evidence is that we're getting better, right? A lot of people have been asking me that, and we're a little over our 4-year average. Like, that would say that, the moat is there. And I'll tell you exactly why it exists as well, right? A lot of hedge funds have gone like pure nonlinear. So bigger and bigger models, bigger and bigger data sets, but a lot of them don't really even know how their models work. And, they don't necessarily care, and those models are making a lot of decisions. Then you have like your fundamental people, the golf course types that are getting information, doing really, solid, contacting the companies. We actually sit somewhere in between that. Like I said, I've been a trade value investor for, more than 2 decades. What we're doing is combining what I would say is really good value investing, game theory, logic systems, with intelligent scale. So we've got a really good combination of that, quantitative, qualitative, and some of it is just simple, right? We scale things 0 to 100. A lot of what I'm doing and what I'm showing is like really simple ideas like, oh, SPY net option sentiment is at 0. You want to be more short than long, So it's really those index level things that give us the those kind of indications. So it's actually the simplification of these things that are quite unique and have co-evolved these models and the explainability, and we're really ahead on that. Nobody has really been working on advanced signals that are explainable, even hedge funds, where we're really been ahead of the curve on this.
Wonderful.
So I should conclude with, they could start, but it would take them a while to catch up. And the last thing I'll say on it is, I am the chief data scientist of Prospero. Like, I spend about 20% of my time every day. I use the Google 20% rule talking to retail investors. Our most powerful signal, net option sentiment, came out of me trying to teach a lot of retail investors how to read an options chain and it not going very well. It was like a Friday afternoon. I said, what if I told you the options market's like this or didn't like it? And the person said, yeah, we'd save a lot of time if you could do that. I've never had to teach anyone an options chain again. That is great. And there's just like, you go to a large company, a large broker, there's so many levels of difference between, the people making the models, the decision makers, the product people, all the way down to the retail investors. For me, there's zero information loss from the people using the products to the science to the product. And that's how we created our moat.
Great. Thank you so much. So we actually have 2 more questions for Reenergize, and then we'll get to our rapid fire question round. So, Stephen, how do I think about break even cost versus different solutions for medium-term energy providers?
Yeah, thanks very much for that question from Angelo. That's a great question. So one of the key things about solutions in the sort of the renewable energy space, which that we're in, is that you do have higher capital costs than solutions that are sort of using fossil fuels, but you have very low operational costs. So when you're looking at sort of the total levelized cost of energy that you're providing back to the grid, you're actually in a better position than you are when you continually have the cost of the fuel. And going back to sort of our scaling business model, it was clear that if we have a solution that is going to cost billions of dollars per project, then we don't have enough of a market or enough customers who can build projects at that sort of scale. So we're very much in the $50 to $100 million projects, and there are thousands of developers who develop projects at that sort of scale in the US, and then many multiples of that across the world. And so the project scale is part of this scalability, but ultimately it's really about what is the payback period or your return on investment, and we see really attractive returns on investment for our solution. Shall I jump straight into the next one, which is about environmental permitting and challenges?
Yeah, for sure.
Yeah, so there's a question about what are the challenges around environmental permitting? And there was a previous one that I answered on the chat, which was about, is the fluid toxic? So the fluid is non-toxic. We've had it tested by third-party laboratories, and it's environmentally benign. Obviously, the reference point is water. We have a sort of solution that is somewhat like a project with water, and we're always being judged by how toxic water is, which it isn't. And so that's our starting point. And that's also our sort of end point, that we need to be as non-toxic as water is, which we are. And then the permitting challenge. So we have permits in the UK. The first permit we got, which took us 5.5 months. People were telling us it would take us 9 to 12 months to get the permit. So it took us 5.5 months. And then the second one we got took us 8 weeks. And in the UK, we have as a stricter permitting process as anywhere in the world. And we're a small country, don't like new visual impact. So, that sort of timescale indicates what's achievable. We're very aware in the US that there are FERC requirements for pumped hydro projects above 40 megawatts. And so our entry market point is to keep the early projects below 40 megawatts until we test the market, because actually one of the reasons for those incredibly long permitting processes in the US is because of the interaction with rivers and lakes and existing watercourses. But our solution doesn't interact or doesn't need to interact with those watercourses. And so when we create our fluid, it's a one-off event and it lasts for the life of the project. So the fluid that we put in a project lasts the same length of time as a project, which is 60 plus years. So we're really building energy infrastructure at scale by multiple sites distributed across the grid. Do I think there are regulatory hurdles? Yes, I think that, but putting infrastructure projects in the world is always challenging. So there will be some regulatory hurdles, but I think we've seen that there are that putting energy infrastructure onto the grids in the US is entirely achievable. And even under this administration, hydropower is listed as one of their preferred technologies. So we think we're in quite a good place.
Wonderful. Thank you so much for answering these questions. Okay, so before we wrap up, we're just going to go through a couple rapid fire questions. So I'll present the question and then you will each have 1 to 2 minutes to answer. So to start, we'll go from Prospero, structural elements, and then re-energize. So first question, when speaking with investors, what gets them really excited about your company? And alternatively, what are some concerns you might hear? George, we'll start with you.
I think what gets everybody excited is the performance, right? I think, a lot of people talk about delivering differentiated solutions for retail investors, and it's really hard to build a platform that we have. We've built, IP, we have joint IP with NYU. We've worked on it for, almost 15 years now. So the proof is really in the pudding in how much work that we put in, and, we're really proud of our results. I would say on the concern side, I think people, will often, talk about the crowded space, talk about the fact that it can be very challenging, maybe comparing us to asset managers. But like I've said, I think when people, dig in, they really see, kind of the unique nature of how we're kind of like teaching people how to fish and how we have a really good plan to grow our user base and pay less for users long term by, earning trust, having a really good free top of funnel. A lot of asset managers don't think about it in that way, and we have a very succinct plan.
Amazing. Doug, you're up.
So the thing that gets our investors the most excited, and by the way, we're currently 100% owned by our patients. And so all of the seed money that's gone to building our franchise systems and our infrastructure were from evangelists of the work, people that had life-changing experiences from being patients at Structural Elements. And so I think that the thing that they get the most excited about is expanding the footprint of bringing the quality of care that we've been able to achieve in our existing locations and the hundreds of thousands of treatments that we've delivered and the 92% patient retention stats that we have of taking those relationships and those outcomes and bringing them to more communities. I think the biggest thing that people are concerned about is how do you go from 3 units to 125 units? That seems like a big jump. And it's really a tech play for us. It's intellectual property. It's the how to perform a structural elements treatment, and it's the infrastructure and the model of this is the box, this is the roadmap to opening up a clinic. Because we're a franchise, we don't have a lot of capital outlay. It'll be franchisees that are building, so there's not a huge capital requirement. And we've partnered with best-in-class partnership and franchise development and project management who will handle the builds. And they've done that for hundreds of other clinics and dozens of other brands. So we don't want to try to get into a new operational industry. We want to stay in healthcare and the delivery of quality care. So, we have passed through entities that will handle that project management for us, who also are experts in what they do. So it won't bottleneck our growth.
Amazing. Okay, Stephen, you're up.
Thanks very much. In some way, what excites people about our solution is also what are the challenges. So we've talked about the sheer scale of the market. So that's really exciting. At one side, you're part of a solution that can fundamentally change the world. But to do that, you've also got to scale your business to do that. So it's on one side, it's hugely exciting. On the other side, that's one of the challenges, and hence being here. And we actually have. This is not the first time we've done crowdfunding. We've done crowdfunding in the UK, and we have 4,000-ish investors from the UK crowdfunding activities. So we have a lot of really supportive followers in this. So some of those are from the energy industry, and so it's great to see. So the other thing that really gets people excited is how credible our solution is. Because we're just building upon the oldest and most mature form of energy storage there is. It's something around 100. So I think the oldest operational pumped hydro project in the world is 120 years old this year. so it's in Switzerland, and so and we're just building upon that huge baseline of knowledge. We're sort of doing a tweak which gives us lots of opportunity to IP, but actually it's something that's been done many times before, and so people can see that it's a relatively small step to get a solution like ours onto the market. And then probably the last thing that gets sort of people we're talking to excited is just how fast we've managed to go from being a sort of very early stage company in the energy infrastructure place, which takes time, takes slow, to building the demonstration project that I showed earlier, how quickly we've managed to do that. And then the challenges actually sort of came up in the thing. Environmental permitting is probably one of the challenges that we get asked about quite a lot. But from our side, we're quite comfortable about that. We'll have many successes and we'll have a few failures on that side. But we can see that as there's a route through to that, to have deployment in every country that we're looking at.
Great answer. Okay, next question. We'll snake back around. So then Stephen, Doug, George. How do you view the landscape of your industry over the next 3 to 5 years?
The landscape of the energy storage industry is just going through the roof. It's a global phenomenon, that it's taken off with lithium-ion batteries, dealing with the short duration, the sort of immediate grid stability needs. What comes behind that is the medium duration solution. So there's a tidal wave of opportunity coming our way. So the market and the world is going to be fundamentally different in 5 years' time than it is today, and we'll see the winners from this race that is underway. Did I fully answer that? Sorry, I was just.
Yeah, that was a great answer.
Was there another part that I didn't answer?
Oh, no, that was sorry, Doug, go ahead.
Well, healthcare is about as big of an industry as you can get, and it's wellness and proactive preventative care is growing into a multi-trillion-dollar industry. You're seeing a big movement in franchise towards wellness brands and longevity medicine, not just into fitness, more curated by medicine versus just workouts. And then you're also seeing just an increasing trend of disgruntled patients who are being let down by the insurance-based hospital systems. So as you have one system kind of failing patients and more educated patient demographic who don't want the hip replacement that their parents or grandparents had, and have a higher value proposition on staying active and healthy longer and kind of taking their health and well-being into their own hands, the cash market has been red hot. So we think that we're very well positioned, and we think that the market is coming our way and coming our way quickly.
Great.
So first, I'd like to talk about my record of predicting things. I started an AI company 15 years ago. Before I started Prospero, we actually beat a global top 5 bank at my last company, predicting their entire corporate bond book using social media and news data. We were very early to that. Now I think we've well anticipated this trend of retail investors becoming more and more important, crowdsourced information becoming more and more important. But I think a lot of people are going to be left by the wayside, because what I see happening now is these models are becoming more and more homogenous, these generative AI things. The data sets, as a result, are getting more and more similar because everybody's just consuming the internet, right? So what's valuable in that situation? Well, if the value of technology is going to zero, the value of unique data is going through the roof. That goes back to my hedge fund question, where it's just like, why is trust more important to us than money early on? Because that trust is going to net us the most valuable commodity, unique data, in the long term. And the other thing is, these models might be very powerful, but at the end of the day, the more homogenized they are, the more similar data sets they're using, they're all going to be giving the same answers, right? So everybody's going to be in these crowded trades of what LLMs and these asset managers that use LLMs are generated by, right? We are actually very well positioned because we have unique signals. We have a plan to earn trust and collect unique data that amplify the efficacy of those signals. So again, I think we're pretty well positioned for the future.
Great. Okay, so our final question for today. We'll go back around, George, Doug, and Stephen. So what is your next big milestone to accomplish, and how are you going to make it happen?
So I think our next big milestone is, we want to cross, 1 million in revenue next year. And, we've talked about this recently. And, I think a lot of that is going to be, on the strength of this alert launch. Like, I'm actually really excited to get a community of crowdfund investors that are going to be kind of the testers of these alerts that help us, evangelize it, as I said. And then, we're kind of going to launch a bunch of products right after that that are really going to accelerate our growth. Once we have our marketing engine down, once we know the best channels to communicate, and once we've built, an even bigger social media presence. One of the things that I didn't mention is, we're already over 100,000 followers just on X, Substack, and TikTok. And that's before we've really put any marketing dollars behind this. So we think that's going to be a really good way to hit a very, I think, ambitious revenue target next year that we're going to hit.
For us, it's the opening of the next couple handfuls of clinics, because we really have kind of built the rocket ship in the air, so to speak. We've been at this for a long time. I've been in practice at this location for 12 years, and the model has evolved. And where this flagship location that you saw in the video is our full model, and we've had the fortune of being able to expand a couple times by having neighboring suites become available. But the other locations, are a little bit more pinned in because of lack of occupancy to expand the same. We also exist here in the tertiary market. I moved to this market because it's where my wife's family's from. Never in a million years would I say this is the market that you should open a structural elements clinic. But at the same time, if we've been successful here, we can be successful anywhere. So I think the thing that we're most excited, we have a prospect franchise location looking to do a 5 clinic territory build in Charleston, South Carolina, and it's just a red hot market. And so for us, I think that's going to put the naysayers to rest when we can reproduce it and we can get them, cash flowing and profitable at a new location quickly and hit those benchmarks that we've laid out in our modeling.
Amazing.
Doug, your answer was great because mine is very similar. That's our next milestones are really going to be the announcement of where we're going to build our first commercial project, and we've got a sort of a hot short list of different. There are some in the UK, but also several in Europe, which could be the first project, and then there's a number in Canada and North America as well. So probably the announcements on where the first commercial and then the second and third commercial projects, because they're going to happen very quickly. So that's really what we're looking to do, and we're accelerating our team, our growth, and building our team around achieving that. So that's the exciting part.
Amazing. Well, thank you so much for answering all these questions and for giving such great insight into your companies. It was very exciting to hear about them. I'm going to share the screen for a moment. These are some QR codes to all the deal pages if any attendees want to take a look. But thank you so much for joining. I'm sorry that we ran a little long, but it was still great to hear what everyone had to say. And thank you so much to our panelists for joining us today.